Whether you're doing it on your own, using tax prep software, or meeting with an accountant, filing your taxes can be stressful and time-consuming. But it's not all bad news. Changes in tax laws for 2009 could mean hundreds of dollars in savings. Joining us to give us the inside scoop on getting the biggest return possible is the Tax Lady, Roni Deutch. Hello, Roni. Welcome to the program.
Thank you for having me.
So there are a lot of ways to maximize your return. And before we go through some of the specific changes this year, please tell me about the difference between exemptions and deductions.
The major difference between an exemption and a deduction are that exemptions are given to you by the government. The most well-known exemption is the personal exemption, which is worth $3,650, where our deductions are those expenses that you generate during the year, like medical expenses, charitable deductions, or mortgage interest deductions. Again, you generate them, you get to deduct them.
Okay, now Roni, let's start with higher standard deductions. How much will this help?
First of all, Meg, when you think of the standard deduction, you've got to think of filing status. If you are single, then the standard deduction is worth $5,700 for you. If you're married filing jointly, the standard deduction is worth $11,400. Both of these numbers are higher than they were in 2008. Very important for you to know. 70% of all taxpayers claim the standard deduction rather than itemize.
Okay, so it's important to pay attention to all the details here. Now, this year, taxpayers can also claim larger personal exemptions. What qualifies as a personal exemption?
Yeah, when you think of a personal exemption, you got to think of your child. If you are supporting a child, you're married, you've got kids, the IRS is going to give you $3,650 because you pay for that support. So again, you think husband, you think wife, and you think children, and then you think savings because I get $3,650 for each person that I'm supporting.
Okay, Roni, let's talk about unemployment benefits because there are so many people collecting that this year and in years past. There are changes on that front as well, correct?
Yes. Let's talk about the consolation prize to the 15 million unemployed people. They are going to receive from the government a 1099-G. On that 1099-G, it's going to show them how much money they received in unemployment compensation. You have to pay taxes on your unemployment compensation, but the first $2,400 is not taxable. That is the consolation prize for the unemployed.
Now, there are so many changes going on. Before I get to the next one, where's the best place to go and look to get the detail and get the outline of these changes if you're, going about doing this yourself?
First of all, Meg, I tell everybody you need to hire a competent tax professional. We know there's over 75,000 pages in the Internal Revenue Code section alone. So you say, Roni, where should people go to get help? And I say, hire a competent tax professional who will understand everything about deductions, credits, to ensure that you save the most money you can on your tax return.
Okay, so you're stressing finding a competent one, but how do you go about doing that? How do you find one?
I think it's really easy, Meg. You go online, you start looking up all of the certified public accountants in your area, you look up all of the enrolled agents in your area, and I think you also need to ask your friends and colleagues, who do you use as a tax professional? Do you like the services they provide? Have you ever been audited? That would be a red flag on someone I would not hire.
Okay, now I know you've stressed that you need to hire somebody, but let's say, money is tight and you don't have that expense. So can you go online and find out about these changes? Can you do this online?
Absolutely, Meg. Anybody in America can go to irs.gov, and the Internal Revenue Service, believe it or not, has an outstanding website that will educate you on every deduction, every tax credit, and on ways that you need to save money. It really is an easy website to use and something I encourage every taxpayer to use to learn about tax laws.
Okay, Roni, let's get back to some of these other changes that are going into effect, and let's talk about gifts, a big one. Any tax law changes here?
Isn't it great to know that you can receive a gift and not pay taxes, but you as the donor who actually gives the gift, that's who the IRS wants to tax. Here's the good news. You can give a gift of up to $13,000 to anybody as a donor and not pay tax on the money that you give. Hey, if you're married, it's twice that amount, $26,000. Again, $13,000 if you're single, $26,000 if you're married. Pay no tax on the gifts you give.
And so what exactly changed then in that law?
it only went up $1,000, Meg. Before we used to be able to give $12,000. Now it's $1,000 more dollars. But remember, it's a great way to reduce your estate and ultimately avoid the estate tax, which I'm sure we'll talk about later.
Okay, Roni, we actually also have a viewer question regarding gift tax. This comes from Paulina of New York, New York, and she asks, I received $50,000 from my parents last year. I understand they will have to pay the gift tax, but how will this affect my taxes this year? Will it count as income? Will I get less money back this year because I received this gift? Roni, take it away.
Absolutely not. You have no worry whatsoever. If you are the recipient of a $50,000 gift, congratulations. You pay no additional tax on that gift, and your refund, if you are a refund participant, and there's 70% of all Americans get a refund, your refund amount will not be affected. Again, you can receive gifts and not pay any taxes on it. So congratulations on that wonderful gift.
Yeah, some good news there. Now, what has changed regarding estate tax?
Estate tax? Do you realize that there is no estate tax right now in 2010? Congress let that lapse. So what people need to know, if they died in 2009, when the estate tax law was still in effect, you can die with $3.5 million of an estate and pay no estate tax, or up to $7 million if you're married. But listen to the awful news. The tax rate is 45% if your estate is over $3.5 million or $7 million if you're married. So again, there is no estate tax. I expect Congress to clean this mess up sometime this year.
Okay, let's talk about people who are saving for retirement. Now, what should IRA holders know this tax season?
First of all, congratulations on making a date with yourself in the future. If you contribute to a retirement plan at work, you're still allowed to contribute $5,000 to a traditional IRA or a Roth IRA.
Okay.
Certainly, Meg, the devil is in the details, and there are some phase-out limitations that all taxpayers need to know about.
Okay.
But this is a great vehicle to save for the future.
Okay, and real quickly, we don't have a lot of time, but what about people who have 401ks?
Even better, Meg. You're allowed to put away $16,500 in a 401k, tax-free, or a 403b. Again, remember, that's pre-tax dollars, no tax consequences whatsoever.
Okay, so let's talk about how are tax credits different from what we were talking about earlier.
Tax credit should be your favorite word in 2009. Why is that? A tax credit reduces the actual tax that you pay to the IRS dollar for dollar, whereas deductions and exemptions, Meg, only reduce your taxable income. So again, the more tax credits you have, the more money you will save in your pockets.
Okay, so now are these credits easy to find out about? Do we need a hotshot accountant to track these down for us?
You know what I'm going to tell you. I believe that you need a competent tax professional who's going to be able to point out to you all the new tax credits that can save you money. But again, Meg, you can always go to irs.gov to look up these tax credits yourself. But again, I recommend a professional to navigate their way through this very complicated code section.
Okay, now let's start with homeowners. We've heard that the new home buyer tax credit has been extended and expanded. Tell us a little bit more about this.
Isn't that great news? There has never been a better time to buy a home than today. Here's why. Prices are low, and the IRS is going to give you an $8,000 first-time homeowner's tax credit when you buy the home. What do you have to know? The home cannot cost more than $800,000, and of course, if you are single, you cannot make more than $125,000. If you're married, you can't make more than $250,000. Also, had to buy the home between January 1st, 2009 and April 30th, 2010. This is one of the greatest credits on the books today.
Okay, people definitely need to get out there and take advantage of it. Let's also talk about how homeowners can also get credit for upgrading their home with energy saver improvements. This is basically a win-win. You save money on the electric bill and you get credit on your taxes, right?
I love win-win, Meg, because you save money on your taxes and you're going green. Anytime that you can install energy-efficient products at your home, such as your doors, your windows, air conditioning, or heat, you are going to get a credit of up to $15